Good afternoon, everybody. Welcome, welcome. Let's see who we've got. Prove. Hello, Harry. Hi, Rika. Hello, Charles. Hope you're well. Good to see some familiar names there. So yeah, thanks for joining us, everybody. I think there may be a few more people joining today. Let's check in there. Hello, Anne. Great. So, topic today, we just wanted to update you on the latest UK market insights and what's going on with regards to taxes, mortgage. I've got with me today Darren Crocker, who is one of the senior mortgage brokers at International Property Finance Group. And I've also got Pavandeep, who we recommend for tax structures, whether you buy in a limited company or a personal name, we typically recommend them, as well as Stephen Poole from International Property Finance Group, as Darren may have to shoot off a little bit early due to some children things that he has, family stuff, basically. So all good. So yeah, thanks very much for joining us today, and drop in the comments. Always like to see where people are from. If you want to drop in the comments what country you're from or where you're from. We've got clients from over 40 countries now. We've done over £1 billion in investments. So yeah, as a company, just a bit about Fabric Property Group. We've been running for several years. We have over 200 five-star reviews on Trustpilot, and we are now one of the most trusted companies as a whole of market provider. So not just off plan and new homes, we also do freehold, commercial acquisitions, as well as asset management and disposal. So yeah, just a quick introduction. Darren, do you want to quickly introduce yourself?
Yeah, hi everybody. My name's Darren Crocker. Like Dale said, I'm the senior mortgage broker for International Property Finance Group, and I've been a mortgage broker now. This will be my 26 years, hence the grey beard. So lots of knowledge, lots of solutions, and happy to be on the call.
Great. Thanks, Darren. And Pavandeep, quick introduction.
Hi everyone. Yes, I'm Pav. I'm the head of tax here at UK Landlord Tax. We're a firm of property tax specialists, and we advise our clients on the most tax efficient structure for their property purchases and also handling their ongoing accounts as well.
Fantastic. And then Stephen, do you want to do a quick introduction
Thanks, Dale.
as you'll be assisting us?
Yes, hi everyone. So yes, I'm sales director at International Property Finance Group. Been in property and mortgages now for 20 years. And that's what my primary function is, I guess, the end-to-end client journey. So, I support everyone within International Property Finance on, just the entire client
Great.
experience and how we operate.
Excellent. So yeah, today we want to discuss why we think the UK still makes sense for investments. Without reading too much into the media and the headlines, of course, there's been things like stamp duty tax changes and some reform to government policy since Labour came in. But as we all know, sometimes the media can spin things a bit out of control. Even after COVID, they were talking about the market crashing. It never did. So we just want to discuss the fundamentals today. We'll be talking about the mortgage market, what's happening there, and why we believe the UK is still a stable market. So we'll be speaking with Darren on the mortgage side and then with Pav on tax. And then, yeah, we'll also look at some of the latest market insights. And we've got around over 50 projects in the books, but I'll be featuring today two or three of our top recommendations that we currently recommend for investment, which we feel are safe and reliable. So to kick it off, that's the agenda. So we'll be talking about mortgages. I'm going to put Darren at the front of the queue here because he has to leave early. We're discussing the mortgage market. Interest rates have recently dropped down to 4.5%. And then we'll be going into the tax markets. I'll be talking about what's happening with capital growth and rental yields, and then go into some of the top investment opportunities, as well as what we can do for you. We're a whole of market company. Excuse me if I talk fast. I get excited sometimes, and I like to get things out the way quick, but we help with tax advice, mortgages and finance for investors. We source the developments and do all the due diligence. I've been in the industry now for 18 years. So like Darren and the other guests on here, we're experts in our field. We've been around, we've seen it all. We know what the challenges can be and how we can help clients solve some of those problems. So overview of International Property Finance Group. They target overseas buyers and non-residents specifically. And the buy-to-let sector is quite different to your owner-occupier sector. So what they do is specialists in finding the best rates for investors from places such as South Africa, Turkey, and other areas. So yeah, I'll pass it over to you, Darren, and then we'll come back to the market insights. Do you want to
Thank you, Dale.
tack away?
Yep.
Great.
Next slide,
So what's
please.
happening?
Thank you. There you go. Thank you. Thanks, Dale.
No problem.
As Dale sort of said, with myself and the team sort of by the side of me, we've been in this industry for a long time. We do pride ourselves in being a boutique style of firm. So everything is designed around the customer and the customer journey. So you'll know that everybody is completely different. So whatever the client situation, we can find a solution. So not just in the UK, but wherever they are globally. Like Dale said, like South Africa, Turkey, globally. So we're a global company, and our sort of ethos, being a bit boutique, is looking at everyone's individual circumstances and then making sure you're getting the best options available to you and your criteria. So we're obviously here to help.
Great.
Next one, please, Dale.
Quick question,
Cool.
Darren. What
Yeah.
key changes are you seeing in the UK mortgage market for 2025?
So there has actually been some really good stuff actually. So lenders are in the UK, the lenders are quite protection and risk, if you like, not risk adverse, but they look at everything as a risk side of things. So actually, the good news this year, they've actually opened up a few more countries that they can actually lend to. So obviously, everything's changing at the moment globally. So what we've done is we've realised that customers from different countries that potentially weren't thinking of purchasing in the UK are slowly thinking they can actually do so. So as what we've done as a company, like you do with your due diligence, we've actually been out to all the lenders, because we deal with every single lender, and said, look, can you lend to this country? Can you lend to clients in this country? And actually, we've got some really good feedback. So there are still some sanctioned countries and high risk countries we can't deal with, but the ones that were there or thereabouts, lenders have actually started lending to those countries. When I say South Africa, Turkey, those type of areas that you mentioned obviously earlier, they've lenders have started opening up to those clients, which is great. And it's not just for UK expats; it's for South African and Turkish clients as well.
Fantastic. All right, so I'll let you carry on.
Good. So as you can see, a long list of areas of finance we deal with. It's not just the UK domestic residential mortgages and UK buy-to-lets. We deal with UK expats, foreign investors, whether that be buy-to-let, residential. Clients come to us for different things: bridging, commercial, development, asset loans. So in the UK, but we also have options in Portugal, in Germany, Australia, Spain, America. So so lots of different things. So we can actually, anything you're asking, just ask. If we can't deal with it, we'll go out and try and find somebody that can. So give you a flavour. Client said to me yesterday, "Can you arrange mortgages in Denmark?" I was like, "No, we can't, but actually, I'll try and find somebody that can." So I've managed to put them in touch with somebody that works alongside us that can actually help this client move forward. So if you've got a question about a country, just ask me the question, and we can see what we can do for you.
Great.
Okay, so as I've already said, obviously we're both bespoke mortgage solutions. Obviously, it says there about leveraging capital. What I mean by leveraging is we do get clients where, and probably Dale gets clients where they've come to him and said, look, we've got all this cash to purchase. We just want to purchase one. So what we do is we sit down with a client to make sure we're looking at utilising that cash element in the most tax efficient way. So that might just be a case of buying one, but actually what we find a lot of people do is leverage it. So they split their money, their cash, into buying more than one property. And I'm sure Parvinder will actually explain about the pros and cons of obviously the limited company side of things. But instead of thinking and focusing just on one property, you do have a chance of potentially purchasing more than one. So it just makes it a bit easier for you.
So what you're saying, Darren, if the people own other properties, right? So say they've got
Yeah.
property in London,
Mhm.
what many don't realize is they can refinance or equity release and then invest in other properties outside of
Yeah.
London, maybe where they can get a higher yield.
Mhm.
Is it
Yeah,
a good
definitely.
time
And
to
one of
do
the
that?
Yeah, and one of the questions we'll always ask a client is, if you've got UK properties already, when was the last time you reviewed that property, if you like? Because a lot of people would have bought a few years ago, probably before COVID, and that they might be equity rich, but need the cash to actually allow them to expand their portfolio. So, yeah, we can look at releasing equity from that property to use that for the next property and the next property and the next,
Great.
if that makes sense.
Yep. Next slide.
That's fine. So loan to values, we get a lot of questions around loan to value. So I would sort of say for international clients, even some of the expat stuff, looking between 60 and 75%. 75% is really going to be limiting the pool of lenders if you've got. But if you're really targeting around about sort of 65%, then that's really the sweet spot with a lot of these lenders for international buyers and expats. Rates are changing at the moment, as you can appreciate. But what we can do as a company, and what I do, is we look at the best solution for the client at that particular point, whether that be a time. We would look at the best solution for the client at the when the time is right. So finding the right lender and the right product at that time. So we can give you an indication of what rates are available today, but it's all relevant to when the property is going to be completed. But obviously, with the help of Dale, we can do that. But as you can see, depending on the client situation, where they're based, their nationality, where the deposit's coming from, sometimes that's quite a big thing at the minute. Lots of family gifts and all the other bits and pieces. But the rates are generally between 4.89 and 7.5%, subject to obviously lenders. But we'll always try and find the best solution for that client. So don't think you're always going to get the high end. If we can get the low end, great. But we will look at the most suitable rate.
So I've got some good contacts. A friend of mine, Charles, from Turkey. He's got clients from Istanbul, and are lenders adjusting their products for offshore buyers post rate cuts for overseas buyers? Are you seeing more lower borrowing rates now?
We've seen a few lenders reduce, and like you just obviously mentioned about Turkey, we've gone out to a lender and said, what can we do for this Turkish market? And they have a set product for the Turkish market. There's certain criteria points that has to be met, and they have got one of the best rates I've seen for Turkish clients. Well, as far as I can remember. So yeah, the lenders are reducing their rates down to make it a little bit more favourable. But like I said, it's down to the client situation really. So yeah.
Fair enough. But rates overall, with inflation being steady, seems like rates are starting to come down. We must be mindful of high risk markets though, where it may be a bit more difficult to get mortgages, I guess.
Again, the circumstances are different, isn't it? So but yeah, we're talking also about leveraging earlier. Really just about maximising your returns. Parvendra talked about obviously limited company side of things. But what Dale was sort of saying here is, look, if you've got a property, say in London, with no mortgage on the property because you didn't think you could get a financial loan in the UK, then we could look at that. I did one last week, so the clients are looking to buy a property for the daughter to live in because she's coming to university. Didn't really want to use their cash, so we just released the equity from their property they've already got to use as a deposit for the next one. So it just sort of opens it all up, if you like. We do find a lot of equity, like I said, a lot of equity rich, cash poor. So they've got the equity, but they don't know how they can get that money out, and this is obviously where we come into it.
Yeah, it's a great strategy in the UK. When I moved there initially, I bought an apartment, commute about London, traveling to work. It was easy, but then the apartment value went up over 4 or 5 years. So what I did is I released equity, and I used that to buy a house. Did a bit of refurbishment on the house, That house went up in value, and then I released equity on that, and then I bought another apartment. So now I had 3 properties, which 2 were cash flow positive, and the tenants were covering the costs. So
Yeah.
yeah, if you're good at the
That's what
numbers,
it's
and
about.
yeah, it can really unlock equity and allow you to invest, even if you're cash poor and equity rich in assets, depending on the market conditions. Okay. Next slide.
Please. So this just explains a little bit of what we were just talking about. So we've got a Middle Eastern client looking to obviously maximize his property portfolio. Like I've just said, this client was always buying in cash because he didn't realize as an international investor he could actually get a mortgage. So I think he attended one of Dale's previous webinars and he come back to us. And the next slide will explain what we mean by the solution. So we'll always try and find a solution for the client. So if you can go to the next slide, please, Dale. So we went out and found the best possible product for him. So what we did was refinance his existing portfolio to much more competitive to make sure, I think, Dale, your words were payment positive. So we'll always make sure that the rent is covering the mortgage. It's just not costing the client anything. And we basically structured the whole of the portfolio for him to release more. So his portfolio, and again, when the next ones he finds the next properties, we're then going again. I've actually just I actually introduced him to Pravinder's company because he didn't even realize he could do it for a limited company, being an international client. So passed him through literally 5 minutes before this call. So hopefully we can nice bit of synergy there.
Yeah, a lot of people don't understand a lot of how this mechanisms work, and they don't realize, okay, my property value's gone up a certain amount. I can release, put a deposit, get a mortgage, and I can work it out. Okay, the rental income now in Manchester is 1,200 a month. My mortgage is 800-900 a month. So it's washing itself. And the main goal, I mean, what are we trying to achieve with investment property? It's retirement, early retirement, or when you decide you've had enough of working, you can sit back and you've got properties that are paid off and you're getting the income on the rent. So for the UK, I just find it is quite straightforward. And because you've got UK laws to protect you and FCA, it really can work in your favor, especially when it's a lower interest rate environment, of course.
Yeah.
Okay.
And because of the stringent rules in the UK, it's always a great place to buy because the lenders are, like I said, not risk adverse, but also so to speak, but they've got so much protection in place that they know the market's really strong. So the lenders are feeling the market strong, and that gets passed on to the clients. So it makes it a really good place to sort of purchase. So, like I said, we expanded this client's portfolio by purchasing 2 more. And obviously, with it being passed on to Pravindeep there, it obviously makes it more tax efficient. I'm sure he's
okay.
We can sort of explain that as well for you.
Great. Okay. Next slide.
Yeah,
process.
Nice. So the process really quickly. Obviously, this will go out to this. It will be available, like Dale said, recorded and sent out. But the initial bit would be initial contact with yourself, with the client. We'll gather some more information. We'll go off and do our research for you. We'll then make another appointment for the client to present our recommendation. If the client's happy, we'll get what's called a mortgage in principle or agreement in principle to say the lender's happy with you as the client can actually get a mortgage. That's quite a big hurdle to get over. The property side of things comes later, but it's just making sure you as a client can actually get the mortgage in the UK. Then it gets passed on to operations sales team. They gather all the documents. We get all the documents up front. We're not a brokerage where we drip feed information to the lender because the lender will literally put the file to the bottom of the pile. We want to make sure it's the top of the pile, looked at, fully packaged, nice and easy. For doing that, valuation happens to make sure the property's rented the correct figure, value of the property is correct, mortgage offer. Then we deal with the solicitors. Everything's done for you. You don't physically need to do any of the chasing. We do all the chasing. Myself and the backroom team, we do literally everything. We deal with you, your solicitor, the lender, Dale, everybody, anybody you need us to speak to, limited company people, so it's all done for you, nice and smooth.
Yeah. So one of the things I've noticed there in the last couple of years, and in with being honest with the clients, is
Yeah.
sometimes off-plan developments, especially because of inflation build costs, we started to see some down values in the market, but that's
Yeah.
because inflation was really high. Interest rates started to go up, so all the valuers got a bit nervous, right?
Yeah.
So I've realized there is a structure you have to follow to use the right valuers,
hmm
panel of lenders. I mean,
Yeah.
what's been your thoughts on that, and how do we overcome this challenge?
Well, and you are right. There's been a few reduction in valuations. Doesn't mean the property's worth any less than it's being sold for, or the rent's any different. It just basically means on the day the surveyor's gone out and said, in his opinion, based on or her opinion, based on comparable
Yeah,
evidence, this is roughly what we think the property's worth. So it's again down to the lender to make that decision. What we normally then do is we will sit down with the lender and work out whether or not is there another product. So if the client's going to say 65%, is there another product with that lender that might do 70%? So potentially keeping the same amount of lending, but just obviously reducing the price of the property. So it just works sort of way out. If that doesn't work, then it's a case of obviously passing back to you guys, and yeah, just having a conversation with either the developer or just explain to the client, look, it's definitely worth it. So the client would just have to obviously increase their
bit
deposit
more cash
to
in.
cover the
Yeah,
difference, really. So yeah, a bit more cash flow, which is why we say the sweet spot 65%. There are lenders that do 70, and there are some
yeah,
lenders that do 75, um, depending on the criteria. But you can appreciate the higher the loan to value, the higher rate. So,
yeah.
which is why
I
I think
think I
65
think
is a
it
good
was
sweet spot.
a combination of, obviously it's investor-led or
Mhm.
buy-to-let schemes, so that
Yeah.
reduces your pool of lenders. And
Mhm.
then also we were in a market where post-COVID inflation was running at 10%. Interest rates were going up, so people were expecting maybe there was going to be a price depreciation,
Mhm.
and valuers got a bit nervous. But on the contrary, prices still gradually, they were stagnant, started to move up. Inflation's gone down now to about 2%, and
Yeah.
interest rates started to come down. So I think that's also made the valuers relax a bit.
Yeah, a
What
little
we are
bit. Yeah.
finding is you just got to, it's sort of a bit of a chess game, really. You've got to make sure you've got your comparables, you've got your
Yes.
valuation pack ready, and that the prices are reasonable. So we with our due diligence will make sure that we put together those valuation packs, and that the prices will stack up. We have just had on a project in Liverpool on the waterfront, we are getting valuations come through now accurately by managing the process for the
Mhm.
customer. So I think that's very
Yeah.
important, and that's why we
And also
work
getting the
well
right lender
together.
at the right time, Dale, because
Yeah, that's it.
we're not a brokerage where we just throw loads and loads of options at a client and think that's never going to work. When we do
Yeah,
our due diligence with the most suitable for lender, we would check with that lender before we issue the research. Will that
yeah,
lender lend on that development? There's no point in
yeah.
just going, here's 5 options. We recommend option one, knowing full well that lender's never going to lend on the development. So part of our due diligence and our research will be
Mm.
checking that lender's got funding on the development and they'll lend on it.
Yeah, it's very important. I just wanted to bring this up because people and agents out there will take deposits, promise mortgages, but you
Mhm.
need to understand there's other mechanics that behind the scenes that you need to check to make sure that the property is also mortgage approved,
Yeah.
and that you're not going to have complications at completion. Because worst case, people put 20% down, they find out they can't get a mortgage, and they run into trouble. So not many people talk about this on a webinar, but I do like to be transparent
Yeah.
in my our business. So I'm glad we talked about that, and we've got a
Thank you, Dale.
process that will avoid
Yeah.
that.
Yeah,
Great.
definitely.
So documents for lending for foreigners.
Standard documents, proof of ID, or a national ID card if applicable, proof of address. I appreciate some countries don't have a proof of a postal service. We ask the employer to confirm the client's address on the income proof, full bank statements, contract with lots of different things. People that are self-employed. If you're self-employed, we need to see at least or up to 3 years worth of tax returns. If
Yeah.
you on the initial call when we talk to clients about their occupation and how they're doing it, if they're self-employed, I appreciate some countries like no tax to pay. You just use a normal standard accountant to pay potentially produce some tax returns. But a lot of these lenders we're finding, and this is probably more relevant this year, is a lot of these lenders are now coming back and saying if you're self-employed, you have to have the accounts done by an internationally renowned accountancy firm. So it can't just be Joe Smith down the road. It has to be from a big company, and sometimes they ask it for a UK office as well. So, but part of the conversation I have with the clients would be to make sure that is because I've told last year I had a client went down the road in Dubai, got accounts certified, sent to the lender. The lender said we're not happy with it. She then had to pay, and she'd already paid £2,000 to get those accounts done. She then had to pay another £2,000 because it had to be done from an international thing. So yeah, we'll manage that process for them.
So just to clarify, Darren, say the development's off plan 1 year away. Initially, you'll do like a free consultation with the client, and then you'll check their eligibility based on their personal situation and also the property.
Correct.
But the actual mortgage will only go through a few months before completion, right? So just run us
we
through
start 6 months. Yeah, 6 months before completion, we'll start the full application. But to do the research, we just need the basic information from the client, copy their ID.
Okay.
Just
Great.
to get it.
Just important we understand there's a difference between the pre-approval and then the actual approval closer to completion. Okay. So this is Darren's details. I know you've got to shoot, Darren. You've got a children emergency. You've got to pick the kids up.
Thank you,
the wife's left you in it today. So I'm a father of 2 twins, so I totally understand. But there is a code there. I've worked with Darren for several years. If you wish to arrange a free consultation about equity release or mortgages, feel free to get in touch, and we'll put you in touch with Darren to arrange that. We will have Stephen Poole on just for at the end of the webinar for any Q&As, any questions that we get. Then he'll be able to help answer that. So yeah, thanks, Darren. Appreciate that.
Thank you, Darren. Thank you, everybody.
Cheers. Take care, Darren.
Speak to you soon. Take care. Thank you.
Bye-bye.
Bye-bye.
Right, Pavandeep. So Pavandeep works for UK Landlord Tax, is head of tax. There are other companies out there that offer solutions where, you know, they make it sound quite simple, set up a limited company and it's like a one size shoe fits all. But the reality is buying in a limited company is not right for every person. So we need to think about what the pros and the cons are. Buying in a personal name, pros, easier process with fewer regulatory requirements, possibly lower mortgage rates under personal name compared to a limited company, capital gains tax allowance benefits from around £3,000, and then the cons, income tax exposure, tax 20, 40, 50, and then limited mortgage interest relief. I'm not qualified to give tax advice. That's why I got Pavandeep on this call. So yeah, if you want to maybe just explain the pros and cons and whether people should be buying in a limited company or personal name.
Yeah, absolutely. Hi, everyone. I'm Pav. I'm the head of tax at UK Landlord Tax. Yes, so as Dale makes a really good point there are a few firms that have a one size shoe fits all for everyone, but it's not the case, and it can often be the case that your personal name might be the more favorable option. So we advise our clients, depending on their circumstances, as to whether they should initially buy their property in their personal name or in a limited company. We often get clients passed on from Dale or even Darren as well that just spoke of us for tax advice. But generally, if you're buying in your whether you should buy in your personal name would be dependent on a number of factors, such as whether you're looking to buy, say, 1 or 2 properties, whether you're looking to buy the property to hold for the long term. And if it is, say, you're looking to buy 1 or 2 and it is just to say for a short period of 5 to 10 years, and then you might look to sell the property, that's when your personal name might be a more favorable option for you. Due to the reasons on the screen there in front of you, there's only 1 annual tax return that you would need to complete currently. And also, if you are selling, there is a capital gains tax allowance. Now it was £12,300 just 2 to 3 years ago, and it has reduced in recent years down to £3,000. So it's not as much of a benefit as it used to be, but it is still a benefit nonetheless, which isn't available in your personal name. And also with your personal name, particularly for those clients who are non-residents, those landlords. They're only taxed in the UK on their UK income. So if that is just to be, say, from one property, and depending on their nationality and country of residence, they're entitled to the personal allowance here, which is £12,570 per annum. It might mean that you don't have any tax to pay on your rental income from your property in the UK. I do have to say though, you have to check the tax treatment in your country of residence, whether that might be. But as for the UK, there might be favourable options if you're just looking to purchase a small portfolio, and it might not be for the long term.
Great. So personal name, yeah, there's a tax income threshold. So say you're earning 12,500 or so, you're not really going to be bothered, right, on the income tax. But if you're earning maybe £40,000 and you've got multiple properties, so at which point does that tax bracket go up where you should start thinking about a limited company?
Yeah, just as the tax rate. So it's at 0% up to £12,570, and then up to £50,270, the rate is at 20%. But then it increases to 40%, which might then mean that a limited company is the more favourable option for you. And that's what we do for our clients. We advise them on the differences between the two.
Okay, great. And then we'll pop over next to the limited company structure. Now, my view is if you're buying more than one property, or you are already in the higher income tax bracket, then I believe it's something that's worth considering. But I'll let you run through the pros and cons there, Pavandeep, and let us know your thoughts.
Yeah, absolutely. So I just mentioned the personal tax rates. You're subject to 40% tax on your rental profits in excess when your income exceeds £50,270. So at that point, even if you're going to buy one property, you're paying the 40% tax on your rental profits. And as well as that, you can only claim a 20% tax credit on your mortgage interest payments, which are often the most substantial expense. Whereas if you compare that to a limited company, the corporation tax rate is 19% on profits up to £50,000. And those profits can be reduced even further by claiming the mortgage interest payments as an allowable expense in full. So if you are looking to purchase a portfolio of properties and you want to hold them for the long term, you also have to consider the inheritance tax position. And there are also inheritance tax savings opportunities available to you in a limited company, as it's the value of your shares that form part of your estate for inheritance tax purposes, and not the equity that you have in the property themselves.
So just to put that in context, I've got a £400,000 house, say, for example, in the UK. Something happens, God willing, it doesn't. But if something happens to me and I own that house in a limited capacity, cash outright, I will get taxed how much on inheritance tax?
In inheritance tax, so if it's in your personal name, it's as straightforward as looking at what the value of the property is, less any debts. If you're in excess of it's £325,000 is the inheritance tax nil rate band.
Right.
So if it would be any excess over that amount would be at the rate of 40%
40%.
for inheritance tax.
Yeah.
And there's no scope for you to reduce that in your personal name. But
Okay.
in a limited company, it's the value of your shares instead. And there are ways that you can go about setting up tax efficient structures so that the value of your shares are worth very little for inheritance tax purposes.
So the reality is, if I'm building a portfolio that's going to be worth £1-2 million and something happens, I want to pass it down to my children, a limited company makes sense, right?
Yes, absolutely. In that
So
case,
there's going to be a big difference of 40% versus what?
It's still 40%, but instead of the property itself, it's the value of your shares.
Okay. Okay. Understood. Okay. Yeah. Do you want to carry on? I mean, the cons, higher mortgage rates, is it much different?
Yeah, so
Mortgage
you
rates
also
in the
have
winter coming.
to bear in mind there are cons as well with a limited company, such as although you are liable to higher mortgage interest rates for your property, you have to bear in mind the fact that it is fully tax deductible as well, those expenses, which is often the most considerable expense with owning properties. But further to that, there's more reporting requirements in that you have to prepare a set of accounts, submit those to Companies House. There's annual confirmation statements you have to submit to Companies House as well. And there's also if you ever want to access any of that rental income for your own day-to-day spending, let's say, you'd have to assess if there are any tax implications on extracting funds out of the limited company. So
Okay.
yeah, there are a number of factors to bear in mind with either option.
Well, you're running it like a business then, really, aren't you? So personal
Yeah.
name, it's a bit more straightforward. If you're going to be serious and buy multiple properties, you want to run it tax efficiently as a business, ultimately. So
Yeah, and it can
yeah,
get quite complex for clients, but no, we discuss the client's circumstances and advise them on the options that are available to them and the implications or the problems they
yeah.
might face in the near future, but also throughout their property journey as well.
Okay. And what has been the biggest tax changes in 2025 that are affecting property investors?
Well, the webinar is coming at the perfect time, really, because it is as
Yeah,
of in a couple of days,
yeah.
believe
That's
it or
why I
not.
asked the question.
There is the abolishment of what HMRC call furnished holiday let properties. No, they're properties that you typically the properties that are let out through online platforms such as Airbnb, so your short-term let properties. There are additional tax advantages available to them, such as on a sale in your personal name, you can be subject to reduced capital gains tax rates. You can offset the mortgage interest in full in your personal name if it's a furnished holiday let, but that treatment of property is to be abolished as of the 5th of April 2025 for individuals, which is just in a couple of days.
Okay.
So it's often the case that we're speaking to landlords more and more. They want to know how those changes will impact them, and it's
Yeah.
quite a complex area which we guide our clients through.
Yeah.
So that's a huge one.
Okay.
As well as that, there are also changes in stamp duty land taxes. There was an uplift of £125,000 from as of the impact from COVID, which the government had in place. That was put in place in November 2022, but that uplift came down, it was removed, came to an end just a few days ago on the 31st of March 2025.
Gotcha. So yeah, so property prices, UK residential stamp duty, non-resident stamp duty tax is now 2% surcharge. Just so people are aware. So your standard 3% plus 2%, right? Unless it goes to a higher bracket.
Yeah, that's correct. So just to clarify that position, so it's if you're looking to buy a buy-to-let property,
Yeah,
there's an additional 5% surcharge as it would be an additional property.
yeah,
That's been in place since the 31st of October, for
October.
around 6 months or so. But
Okay,
the change now is that up to £250,000, the rate of stamp duty would have just been that 5%, but
okay,
it's only now up to £125,000 where it's at 5%.
okay.
Between 125,000 and £250,000, the rate would now be 7%.
That's it. So interest rates have come down, inflation's cooled, but stamp duty's gone up because they're trying to
Yeah.
make the Labour government's trying to claw back somehow, I guess. Um, I mean, the thing is, if we look at the stamp duty tax in other European countries, I mean, I was looking at Greece recently, and it was like 10%. So it's still one of the lowest property taxes in Europe compared to annual wealth property taxes in other countries. And like you say, many investors can offset the tax via better rental yields and the capital growth you're going to benefit from as well. So, but yeah, it's something investors do need to be aware of when they calculate their costs. So I just want to touch on that. Thanks, Pavandim. So the only other question, I guess, is so on structuring and for inheritance tax, do you think long-term planning, if you're buying a portfolio, it is better to buy through a limited company ultimately?
Yeah, ultimately that would be the case. So it's often the case that a landlord wants to build a property portfolio with the intention to eventually pass them on to their children. And in that case, you do need to consider inheritance tax.
Yeah.
And there are tax efficient structures in a limited company, namely a family investment company structure, which you might be
Okay.
able to see some reading on. You might have heard the name before.
Okay.
Those sorts of structures are available to reduce your exposure to inheritance tax for portfolio properties.
Yeah, it's just, sometimes long-term planning is over short-term planning, but I guess you can always start with your initial investments, and then later on you can restructure things, right?
That's correct. Yes, it can be restructured in the future. It might be best to have the structure in place at the outset. So it would
Okay.
always be best. We always advise landlords that we speak to them to seek advice at the outset to see the implications for the long term. So we are there throughout their property journey. So we make them aware of possible hurdles
Great.
in the future, but
Great.
any changes can
Okay.
be made in the future. Yeah.
So yeah, to sum up, personal name, simple setup, lower upfront costs, capital gains tax exemptions, but higher income tax if you are buying multiple units or in a higher income tax bracket. And then a limited company, of course, you can reduce that and pass the shares on, 100% mortgage interest deductible, lower corporation tax at 19 to 25%, better inheritance planning, right? So
Yeah.
that's kind of summed it up. Okay, cool. So yeah, if anyone wants to put in the comments, I don't know if it's working, but put in there whether you want it buying in personal name or limited company. It'll be interesting to see what your current strategy is. Check. I don't see anything. Okay, we'll carry on from that. Fine. So today I wanted to feature. We do have many different projects for whole of market. We take our due diligence very seriously with regards to making sure projects are fully funded, making sure that they will deliver on what investors have been promised. So today I wanted to show you our latest featured product called Lakeside Staines. And yeah, that's just bring this up here. Sorry, just bear with me. Stop share. Oh, share. There we go. Right. So Lakeside Staines upon Thames. I actually used to live near Staines and around Weybridge, Walton area when I moved to the UK about 20 years ago. It was a very nice area. This is a luxury waterfront living near London. So commuter belt has always been a key area we feel is good for capital growth. It's 35 minutes to London Waterloo. We've got a stunning lakeside setting. It's an undersupplied town with strong capital growth. So this has just come to the market brand new. We have 1 and 2 bedroom apartments from £262,000. Very close to Heathrow Airport, so you can do short-term lets as well. Quick access into central London. Most young professionals tend to commute into London. 999-year leasehold, which is excellent, and completion this year, December 2025. 10% on exchange. So if that's something of interest, we'll be emailing some information then on next week. But just mention that yes, you would like some information, or give us a call, and then we'll be more than happy to assist. There's a lot of first-time buyer interest in that as well, so we believe that the mortgages will be efficient. Very nice development that just land to market. I've got another one, which is one of my favorites, Tranquility House in Manchester. Manchester house prices have grown year on year quite dramatically. We've seen prices increase around 20% over 5 years. But more importantly, we have seen Manchester just go crazy in terms of regeneration. There's big developers out there. This is Heaton Group. So they're a leading developer. trusted. They've delivered a number of projects for our customers in Preston and Manchester. And, this will be one of the top investment opportunities. Construction's underway. Also, waterfront. We like our waterfront property, whereas it adds a bit of extra value for investors. And then Savills forecast 29% capital growth. Construction is well underway. Phase 1, Berkeley Square, will complete December 2025, and phase 2 will complete end of towards 2026. So well underway, ahead of schedule. Situated between Manchester City Centre and Media City. It's a £1 billion investment. I see they're doing the new stadium investment there as well. So there's a lot of positive news what's going on in Manchester, close to the BBC. And then you've got an affordable entry point there for your one beds with 25% on exchange, and then the balance at completion, cash or finance. So second best recommendation. One of my favorites, we didn't originally have it on the slide, but I felt that we should include it, is Dockside Residence. This is right on the waterfront adjacent to the M&S Arena and also the exhibition centre. It's fully operational. It's occupied at 70% plus per annum, been running for 6 months. So I've got 48 apartments there. We're about 50% sold. I saw a couple more sales coming today. And just really, this location blows me away. It's a really good location. Completed, fully furnished, and there are some incentives for April on this particular one. So if you're interested in Liverpool, just message us inquiring on Liverpool, and we can send you Dockside Residence. As you can see, it's right by the M&S Arena and the exhibition centre at the Royal Albert Dock. So really, you can't get anything better than that in terms of location in Liverpool. So that's definitely one of my top picks, and one where I would certainly be buying a unit myself. This is just to give you an idea on returns. So you can do normal rentals on most of our properties. So on Dockside, you're looking at 1,300 to 1,500 per month because it's a premium location. You've got to consider your service charge and your management fees. So you're looking around 5 or 6% net. The one in Staines, in fact, ASTs, you're looking 6%, which is great. But they do have the option of service apartments, and there you can boost your rental yield based on the current occupancy. We're looking currently at about 7.58% net on the Liverpool project. So 3 really good options there. Lakeside Staines, brand new launch. We've got Tranquility House in Manchester, well underway. And then we've got Dockside Residence, which is completed and fully tenanted. So out of those 3, Steve, which one do you prefer? Okay, get you in the conversation.
Do you know what? I'm a big fan of Liverpool.
Liverpool,
yeah, I had a few friends go to university there, so many fond memories. But seeing it over the years and how it has developed, it's a special place, Liverpool.
That's it. One needs to be cautious because there are off-plan developers that have run into trouble, but there are some decent, good quality projects, and I feel like the prices are still, it's still 20-30% cheaper than Manchester. And when I go to Manchester, it's like a big city. It's like a smaller version of London, I guess. But when I go to Liverpool, it's got that kind of the culture and the vibe. You've got the Beatles. So it's really famous, and it's got the Liverpool Football Club, of course. So definitely recommend Dockside Residence. On that note, if anyone has any questions, please feel free to drop them in the comment section. In the meantime, I was going to talk a bit more about what's going on in the UK market, but because Darren had to leave early, kind of skipped that part. Let's just go back. Tranquility is the winner. Someone said, no doubt, next to the new Man United Stadium, from Harry Stewart. Thanks for that, Harry. But yeah, just on the latest insights on the market, I did a very brief snapshot here. So are house prices going to go up or down? So house price growth continues despite a temporary dip in sales in April because of the stamp duty rise. Annual house prices increase across UK regions: North East plus 9.1%, Northwest plus 6.8%, East Midlands plus 6.2%. Savills and Rightmove indexes. So asking prices hit a 10-year high in new seller listings, indicating a strong market confidence. There is, however, conveyancing bottlenecks. Over 575,000 transactions are delayed, contributing to the slowdown post the Q1 rush because of the stamp duty. So forecasting investor confidence, according to the Royal Institute of Chartered Surveyors, it's a 47% net positive sentiment on the house price growth over the next 12 months. According to Property Mark, strong buyer demand persists, 87 new prospective buyers per branch versus only 10.5 listings. So that's the housing market. If we look at the rental market, there's a supply-demand imbalance. So the UK government still has to build 250 to 300,000 homes per year. They're not meeting their targets. You've got 12 tenants chasing every rental listing. So there's just not enough rental accommodation in these cities to meet the demand. It's what they call generation rent. Plus 45% increase in tenant registrations, according to Property Market. So again, rental price growth outpaces inflation in most regions, according to the Office of National Statistics, at 8.1% annual rent increase. According to Rightmove, there's been a year-on 4.7% increase in rents. Not good for tenants, but might make up for a bit of those extra costs landlords have to take up on stamp duty. Yields remain attractive. Northeast 8%, Yorkshire and Humber 7.8%. Even London is actually going up now. So people weren't investing in London because yields were quite low. But we're starting to see yields like on that Staines development, 6% net. So the macroeconomic factors, base rate's been held at 4.5% with potential rate cuts later in 2025. Cross fingers. The main thing is driving that is inflation is dropped to 2.8%. They forecasted a possible temporary rise to 3.2%, and wages are rising faster than inflation. So there's quite a lot of data here. I don't want to bore you too much. If you just put in the comments free report, we will send you a free Q1 report with an update on where the market is at the moment. Steve, do you have any other thoughts on where the market's heading in terms of the mortgage market?
Yeah, I guess I do. I think it's this is why sessions like this are very, very good sometimes. You know, when you're in the market for 20 years, sometimes it's nice to sit back and reflect on everything you've seen and how things have changed, because so much is based on sentiment, based on the immediate future. But you know, people with long-term plans and stuff like that, property is always going to be a winner. Even, you know, don't want to comment too much on what's going on today with obviously all the tariff announcements and stuff, but at the same time, you know, anything around goods and other things like that and services, property will always be highlighted as a very, very safe bet. And business at the moment is a lot more interactive than it's ever been. That's probably one of the best bits about working in the international space. You know, if you're a UK resident doing UK property, it's typing into a computer, whereas when you're dealing with expats and international buyers looking to buy in the UK, the lenders want to have conversations. They want to hear what it is, and they're a lot more, as Darren said, there's a lot more liberal criteria out there, because I think they see just how much of a positive thing it is. And you know, you touched on the rental culture of the UK. You know, it's going that people want that flexibility, I guess, more than they want home ownership, which is a great time for investors to sort of secure those, you know, sort of properties in good locations that are only going to yield wonderfully over the years.
Yeah,
it really
I mean,
all
you've
blends
got
in well.
these cities have major universities as well, right? So you've got some of the best universities. People go to Manchester University, Liverpool University, they graduate, they often, you know, they'll end up staying in that city or making it their second home. So there's a real drive, and a lot of media and tech companies in particular. I can see, especially with AI. I did a webinar on AI and PropTech in January, which was really, really good. Sam Smith from PropServe, he's just built a great property platform where you can register and you can get your contractors, your painters, your decorators, your managers all through one system. So it's interesting to see where the property space is heading. And I think technology will certainly have a big play on that as well. But yeah, any other thoughts, Steve?
No, I think it's, as ever, I think, you know, when people are thinking about doing this and have got the means to do it, just get in touch, have a chat. You know, between everyone here on this call, we've got property experts, tax experts, and mortgage experts. It's the full suite of a good end-to-end experience where, you know, you can shape a relationship for a long time.
Great. So yeah, so Pavandeep, any final thoughts on the market?
Yeah, so it's often you can see a lot of information to do with taxes. It can often be quite confusing or quite a bit of a headache for landlords, but no, we can help them streamline
Yeah.
the process, take away that headache, make sure your tax returns are done on time and payments are made on time to the government.
Fantastic. So if you want to get a tax consultation from Pavandeep, it'll be completely free initial half-an-hour consultation. Just put tax in the chat. Just write the word tax, and then we'll introduce you to Pavandeep. If you want to get a mortgage consultation, just put mortgage in the chat, and then we'll put you in touch with Darren and Stephen at International Property Finance Solutions. So I can see Dawn putting their tax, Rendani, free report. That's all great. And then, yeah, just we do free one-to-one consultations. I have a team of senior consultants, or you can speak to me myself after the webinar. Just let me know when you're free and we'll jump on a Zoom. We've got access to Lakeside, Staines, Dockside, Manchester. So we feel we've got some of the best products in the market, and we can link you a one-to-one strategy call where we can discuss your requirements. From there, we can then put you in touch with Darren and Stephen for mortgage advice, and then Pavandeep for tax advice, and then you can make your decision how you're going to proceed and what you're going to proceed with. So that's the way we work. We first want to find out exactly what it is you are looking to achieve, your long-term goals, your wealth strategy, your family plans, and then around the tax and the mortgages and everything else, we can plan accordingly. So I see your message, Dawn. I will give you a call, no problem. I think that's it from me. So biggest takeaway from today, of course, people are still investing. I still believe in the UK market, despite some of the news headlines we see. It's got a lot of people. It's got a lot of history. It's got a sound legal system, and the British pound, quite frankly, I'm in South Africa now. They're like talking about expropriation of land. The currency's tanking. Interest rates are at 11%. So for me, the UK makes a hell of a lot of sense. And I'll certainly continue to invest. I've bought in other places like Philippines and Brazil, and I've lost money. The UK has always consistently performed and done well, but one does need to choose the right partners and be wary of things that sound too good to be true. If someone's guaranteeing you 10, 11, 12% plus on a loan note or assisted living, follow my LinkedIn. You'll see I'm quite vocal about these things. I do like to educate the market and ruffle a few feathers, but we'll make sure you're taken care of and put in with the right team to assist with your investments. So thank you everyone for your time, and yeah, we'll be in touch. Contact us anytime. More than happy to help. Thanks for your time, Stephen. And Pavandeep, thanks everybody for joining us. There will be a replay, and we'll share that with anyone who was unable to attend the webinar as well. We'll put it up on the YouTube. You can feel free to share. Thanks everybody. Take care. All the best.
Thank you.
Thanks.
Bye bye.